Vinit Sambre is with us, Head of Equities, DSP Mutual Fund. Vinit, great to have you with us here. Appreciate your time here on CNBC-TV18 as always. I mean, just a word on HDFC Bank, if we can begin this conversation with Vinit, because the analyst day happened yesterday. There was some. I'm not sure if you had a person there, and what is the feedback that you got. But what really is your sense? Because it's also important and pertinent because you got the rest of the market where valuations are running generally higher or much higher than historical valuations, and you've got this large group which is banking, and within that HDFC Bank where valuations are reasonable, and money is coming into the market. You've got to put money to work. So this question then becomes important. Go on.
So good morning, Prashant. And there's some limitation to the extent to which how much I can talk about the companies which we may be transacting or we also have in the portfolios. But broadly, if you look at our portfolios, we have been in general, I think positive on the private sector bank, and within that, HDFC Bank is one of our holdings in the portfolio. Now, overall, I think from the time the merger took place, I think the expectations around the way in which the bank will sort of start showing growth, and also the consolidation timelines of the consolidation, the benefit which the banks will derive. I think those have got a bit sort of pushed out to maybe beyond the in general expectation. But what we believe is that we feel that, like you mentioned, overall, if you look at the markets, I think the market is has pushed up the valuations for most segments. Banking as a pack here, we are trading at reasonable valuations, including the bank under consideration today. Maybe the recovery process may take time, but this is a good time to accumulate these high quality franchisees and hold them on. I think the way to create wealth over a long period of time is to sort of look at high ROE businesses which have sustainable growth prospects in the future. And only point is, I think the biggest arbitrage one has the time arbitrage. Information arbitrage is something which people have lost out. So I think from that perspective, it makes sense to be part of this large franchisee is what I believe.
By the way, many stocks hitting fresh highs despite the lackluster opening. Indian Hotels is at a fresh high this morning, and it's been one of the strongest stocks this year. It's up 25% already this year, and it's at a fresh 52-week high at 546. Jefferies put out a note yesterday where they said that the double-digit revenue growth is something that can continue in FY25 for Indian Hotels. And given the kind of robust wedding season that we've seen this time around, the trends continue to be positive. Vinit, I wanted your thoughts on some of these spaces, right? Whether it is aviation, hotels, hospitality in general, consumption, discretionary spending, all of these spaces are picking up quite a bit. You think the run is done here? If someone's missed this bus, is there more to go?
Yeah, so unfortunately, we have missed out on participating in some of these businesses, like you mentioned, the hotels, aviations. Because in general, when we looked at their long-term history, we figured out that these businesses they don't generate high ROEs, and they are very cyclical in nature, and it's very difficult to then take a slightly longer-term view on some of these businesses. And today, the cycles for them are very, very positive. But what we have sort of focused on, I think, are some of these retail malls which have done well for us. The consumption trend has been good as far as the premium and the urban consumption trends are concerned. We have also looked at some of these QSRs, which in the past has really done well, but currently they are undergoing some bit of this slow demand momentum, and we believe that the opportunity size is huge. We are currently in terms of our overall exposure as from within the food industry, QSR is a very small proportion, and we believe that as the urbanization grows, as income grows, the consumption trend should pick up. So I think over the next few quarters, maybe, and I've been saying this for a while the consumption trend broadly looks slow, but this is also a good time to gradually build some of these discretionary names, is what I feel. But only caveat being that we would like to focus more on businesses which structurally are able to produce decent ROEs over a long period of time.
Okay. So you think QSRs are turning the corner, like Jubilant Foodworks, Devyani, Sapphire, Restaurant Brands, Asia. What about the other portion of discretionary? Names like a V-Mart Retail. We know Titan is doing well, Trent is doing very well. But some of the other pockets like Vedant Fashion, Nykaa, here you have seen the impact of slowdown in discretionary spending. What about that aspect of the consumer? Are you bullish on it?
Yeah, so just to clarify, when I spoke about the QSR, I was not hinting at, they're turning around. I'm saying that they're still in the midst of a slowdown phase, but that's also good time because the stocks, otherwise you don't get these stocks at maybe, decent valuation. So I'm saying that over a period, as these companies go through a bit of a slowdown phase, each of these companies and the ones which you mentioned also, these are, high quality franchises. And as these companies are facing challenging times, maybe at certain point in time, every company will find that a lot of these are getting discounted more than required in terms of the valuations when we look at the long-term averages. And at a point when these becomes attractive enough, it will be good to start accumulating those in the portfolios. Is the strategy which we are trying to deploy.
At a time when most global economies are struggling, right? We just heard about Japan and UK entering into a recession. China's property market is pretty much in a bubble. India is standing tall, especially with the growth projections. Now, I understand that it's not as simplistic as we expect it to be. Money is not going to directly move into a market like India. But given that we have this kind of a situation, do you think India has the upper hand even in 2024? And could that be one of the reasons why this uptrend could continue?
So, see, first of all, let me admit that as far as our country is concerned, we will have relatively much better growth metrics as compared to some of the global peers. But at the same time, let me also mention that when we look at the long-term growth trends for India, India does well. It does exceedingly well when the global, countries are also doing well. So it only adds up to the momentum. And if we have large economies actually struggling, or you have some of these developed economies go through a slowdown phase, I would want to say that India would not remain unaffected. We will also see some bit of the impact of slowdown. And if we observe the third quarter results, which just have got announced, a lot of the companies which are export facing, maybe IT, some of the bearing companies which have exposure to their global parents, they are selling their products there. We have seen considerable amount of slowness in the business, and which is where I believe that some amount of impact we will also carry through. Just that relatively we should be better off. Since I've touched upon the quarter three result, let me also mention that. Let me just also mention that if we look at the last 3 quarters trend, the top line has been decelerating, and we've come down to a single-digit growth number. While the earnings momentum is strong, the benefit of the margin tailwind has flowed through, but that also will come in the base now. And hence, to me, I think it is very important that as we go towards the next 2 or 3 quarters, the sales momentum has to recover. Otherwise, we will see slowdown in the earnings as well. So I think from that perspective, next 2-3 quarters remain important, where the valuations are at highs and maybe the earnings start to look a bit slower than what we had seen them in the past.
All right. Vinit, just one more a point I wanted your thoughts on. I'm not sure you wondered about this, but for example, Whirlpool is looking to sell about 24% of stake in its Indian arm today, right? You've had so many other deals, Novartis, for example. There was Timken before that, et cetera, et cetera. And these are not investors where the lock-in is finishing and they're selling. These are parents who are actually monetizing their stake in Indian subsidiaries. I'm sure, when these blocks come, you would have been shown some of these deals and asked for interest. But what's going on? Is it foreign companies realizing that valuations are very rich and make sense to monetize some of it, or is it something else?
So you're right, Prashant. I think not just the foreign companies, but we have also seen a slew of Indian promoters, encashing through the last 1.5 years as the markets are hitting highs. And maybe when we look at the valuations, most companies in their history, I think they are trading at the high point in terms of the valuation. So I think at this juncture, many promoters would like to encash. There are also other reasons, maybe the parent company globally are facing some stress. The balance sheets are leveraged, and they want to maybe moderate those things. So other aspects are also there, but most importantly, I think as we see that most of the companies are trading at peak valuations, these promoters are willing to encash, and that also to me is a hint that where there is a lot of frenzy. The retail guys are becoming really very bold in terms of buying stocks. It also at this point we should also try to caution some of the investors that stick to quality, stick to being more rational, and just try to take hints from these events, and then take a long-term view as far as the investments are concerned.
All right, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So stick to quality and stick to growth. That's the word coming in from Vinit Sambre.